You're not the only one asking it. Why are we still paying over $4 a gallon at the pump? There are so many complex factors that drive gasoline prices, and today we're going to walk through some of them. First though, what doesn't affect gas prices all that much? Surprisingly, the president. While research shows that public disapproval of sitting presidents tends to rise with gas prices, they don't actually have much control over what you're paying at the pump on a day-to-day basis. Here is MU political science professor Dr. Heather Baugh, who we'll be hearing more from throughout the video.
I mean, people give presidents far too much credit for economic performance, and they place far too much blame on presidents for economic performance, in my opinion. Policy change is often so slow, and then the effects of policy change take a long time to really affect an economy. And so to think that the president has much immediate influence or control over an economy, I think it's stupid, it's foolish.
So if it is not presidential policy primarily driving up gas prices, then what is it? You may be shocked to hear that the war in Ukraine is not the main culprit either. Yes, the US banned Russian oil imports, but we get most of our oil from the Middle East, not Russia. The brief spike in crude oil prices this March was instead driven by nervous executives in anticipation of effects that just didn't really end up affecting the US as we expected. The conflict actually hit European and African countries much more heavily.
We don't import very much Russian oil, is quite frankly what it boils down to. And so yes, there is less supply of oil because some countries have, the United States and a few others have banned Russian oil imports, but Europe hasn't done so yet. Mm-hmm. China hasn't done so yet. And Europe and China are the biggest consumers of Russian oil. So the global supply of oil hasn't really changed that much. With media, right, the world is so much smaller, right? And we see the pictures and the images and the videos of what's happening in Ukraine, and those are ever present, right? If you pay any attention at all, you're going to see them on a daily basis, and they're shocking images and shocking visuals, and they're saddening, and yet we can still just go on living rather unaffected by that, and that's kind of mind-boggling, I think, for sure, right?
This is not to say that the war in Ukraine has had no effect on crude oil prices in the world. But crude oil has actually been going up in price since the beginning of the year, and it is safe to say that there are a multitude of other factors that are more influential than the war, at least in the United States. So now that we've gone through the misconceptions, what is really causing gas to be so expensive? Well, it's mostly local gas stations themselves. Econ 101. Gas station owners will raise the price of gasoline if the oil they are buying becomes more expensive. They don't want to lose money. So when crude oil prices rose last year and in the first quarter of 2022, mostly due to OPEC production cuts put in place in reaction to low demand during the COVID-19 pandemic, gas stations reacted as expected by raising gasoline prices. Now though, crude oil prices are down more than 20% from March, but gas remains over $4 a gallon. This is actually a well-documented phenomenon that economists call rockets and feathers. When crude oil prices jump, pump prices tend to rise like a rocket in response. When crude oil prices fall, though, pump prices tend to descend gently, like a feather. Gas stations are not willing to lower their prices yet because they cannot anticipate what oil prices will look like in the next few days or weeks. Gas station owners have to take into account the fact that they have to buy more fuel tomorrow and later in the week. If the price of oil skyrockets tomorrow, but they sold their whole stock today at a significantly cheaper price, they've lost money. The rockets and feathers phenomenon is also supported by what is called tacit collusion, where gas station owners, without communicating directly with each other at all realize that they will benefit if prices remain high, so nobody wants to be the first to lower them. High gas prices have more consequences than hurting your pocket at the pump. It's a big factor in rates of inflation. Inflation is measured by the Consumer Price Index, or CPI, which the U.S. Bureau of Labor Statistics defines as a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. So how much does it cost to buy everyday goods and services in comparison to what it used to cost? The BLS recently released the most recent CPI data, which puts inflation at 8.5%, the highest since 1981. For reference, the Federal Reserve aims for a rate of 2% in the long term. Inflation is a big problem in U.S. domestic policy right now, but luckily, unlike gas pump prices, it is an issue the government has the resources to directly affect. The federal government can reduce the money supply in the economy with a method called contractionary monetary policy. This increases interest rates and decreases bond prices. They may also implement wage and price controls, but these methods always have the risk of causing job loss and recession, so they are implemented carefully. So, are gas prices going to go down soon? Eventually, gas stations will float prices back down to their proper number in relation to crude oil, but that is still relatively high. Also, just because the war in Ukraine is not a huge factor in the US economy right now, doesn't mean it will stay that way. In addition, inflation is an extremely complex problem to fix. In short, it's complicated. Gas prices at your local pump are the easiest identifiable sign of a struggling economy, and it's easy to become frustrated. But next time you feel the urge to simplify the matter and pin all the blame on the president or a high profile conflict, remember that it is always going to be more complicated than you think.